Assalamualaikum and hi. Today we're going to present about internal and governmental financial auditing and operational auditing. Internal financial accounting is provide independent and unbiased advice which helps make an organizations better. Institute of Internal Auditors IAAM, Institute of Internal Auditor Ethical Principles and Code of Ethics, which includes integrity, objectivity, confidentiality, and competency. Institute Internal Auditors Professional Practice Standards, which attribute standards and performance standards. ISA 610 using the work of internal auditors, which is objectivity. Internal auditor must be independent with policy ensuring fairness. For competence, the internal audit learned should be skilled and qualified. For the systematic approach, confirm the internal audit, use a standard approach, and ensure there are qualified control measures in place to maintain high standards. Thank you.
So hi, Assalamualaikum. My name is Narif Ashraf bin Anwar and I will presenting about relationship of internal and external auditor. So first we have two types of auditor, which is internal auditor and external auditor. So as you already know, internal auditor is those who are employed by the organization they audit, while the external auditor is an independent of the organization they audit. While the internal auditor focus on internal process, risk management, and compliance, external auditor primarily focus on the accuracy and fairness of financial statement. Next is similarity between the internal and external auditors. So the similarities of internal auditors is firstly is competency, which is both types of auditor needs to apply their expertise, including knowledge, skills, and experience in auditing practices. They must stay updated with relevant accounting and auditing standard. Next is objectivity. Internal auditor must remain unbiased while evaluating and reporting their findings to ensure credibility. External auditor maintain objectivity to ensure their audit opinion is not influenced by personal or organizational interest. Next is methodology, which is under the external auditor. Both use similar auditor tools, techniques, and methodologies such as sampling, risk assessment, and analytical procedures. Lastly, in similarities under the external audit is audit risk model and materiality. External auditor focus on assessing audit risk and determining materiality level to guide their audit approach. Lastly is the differences between the internal and external auditor. For the internal auditor, they are directly responsible to the organization management and sometimes the audit committee. Their goal is to improve internal operations and risk management. For external auditor, they are responsible to external stakeholders such as like financial statement users, investors, and creditors. Their goal is to provide assurance that the financial statements are free from any material misstatement. So next is the guideline to the director on statement of internal control. So firstly is to provide guidance to director of public list companies in making disclosure in their company's annual report. The second one is to derive from the Turnbull Report 1999. The third one is to explain the key areas that director must pay attention before they can make a statement in regards to their company's internal control. The fourth one is the directors are also expected to independently consider other areas that are specific to the type of business that are engaged in. The fifth one is to evaluate the adequacy and the integrity of their company's system of internal control. And lastly is to emphasize the need for proper risk assessment. So next is governmental financial auditing. Under the governmental financial auditing, we have Jabatan Audit Negara, which we also have the external and internal audit. The primary sources of authoritative literature for performance of government audit is Audit Manual, which is issued by the GAN as reference. Consists of the financial statement of governmental units. Second is government contracts and grants. Third one is internal control. Fourth one is fraud, and the last one, which is the fifth one, is other non-compliance with law and regulations. So next is regarding Audit Act 1957. Using guidance from Audit Manual, Auditor General is responsible to audit account of, first is the Federation and of the states. The Auditor General audits the financial statement of both the federal government and individual states. This includes verifying the revenue and expenditure aligned with approved budget, and the audit ensure compliance with laws such as Financial Procedures Act and relevant financial guidance or financial regulations. Second is fund established in the state of the Federal Territory, Article 97. The Auditor General ensures that these funds are managed according to their intent, purpose, and identifies irregularities or misuse. The third one is public authorities. Public authorities include statutory bodies such as EPF, or also known as Employees Provident Fund, and also Society Security Organization and public universities. The audit ensure that these bodies use fund responsibility and operate transparently, and also to achieve their goals effectively while adhering to law and regulation. Next is other corporate bodies in receipt of a grant or loan from federation or a state. These include private or semi-private entities such as a non-governmental organization or NGOs, or private companies receiving public funds. The Auditor General ensures that these funds are used for the intent purpose, properly accounted for the supporting documentation, and not waste or misappropriated. Lastly is other funds. Other fund refers to miscellaneous public monies outside the core categories, often related to specific government initiative. For instance, disaster relief funds, economic stimulus package, and environmental or social development fund.
Assalamualaikum. My name is Muhammad Iman Hakim bin Muhammad Azmi, and I'll be talking about audit and reporting requirements, audit manual. This audit manual outlines the procedures and guidelines for conducting audits and preparing audit reports within the organization. Its purpose is to ensure consistency, efficiency, and effectiveness in the audit process, while also complying with relevant legal and regulatory requirements. The standard basis for audit and reporting requirement in an audit manual is typically grounded in a combination of internationally recognized auditing standards, local legal and regulatory frameworks, and the specific needs and objectives of the organization conducting the audits, and it includes Audit Act 1957, Jabatan Audit Negara Practices and Experience, standards used by accounting profession, international organization of supreme institutions, and other supreme institutions. Next is financial auditing standards. Materiality refers to the significance of an item or an error in the context of the overall financial statements. An item is considered material if its omission or misstatement could reasonably be expected to influence the economic decisions of users of the financial statements. Materiality is a key concept to key concept in financial accounting that helps to ensure that financial statements are relevant and reliable. It is also guide auditors in determining the scope and depth of their audit procedures. Secondly is quality control. Quality control in financial accounting refers to the system and procedures that accounting firms implement to ensure that their work meets professional standards and produce reliable financial statements. It is about maintaining a consistent level of quality across all engagements. Thirdly, compliance auditing. Compliance auditing is a type of audit that focuses on ensuring that an organization is adhering to relevant laws, regulations, and internal controls. In the context of financial accounting, compliance auditing involves assessing whether an organization's financial statements and accounting practices comply with the applicable financial accounting standards. Fourthly is reporting. Financial reporting is the process of communicating an entity's financial performance and position to stakeholders. It involves preparing and presenting financial statements that provide a true and fair view of the entity's financial health. And lastly, audit files and working papers. Audit files and working papers are the documents that auditors create during an audit engagement. These papers contain the evidence obtained and the procedure followed by the auditors in performing their work. They are essential in providing evidence to support the auditor's conclusions about the fairness of a company's financial statements. There are five reporting requirements of Audit Act 1957. First and foremost is essential accounts and records have not been properly maintained. Monies have not been fully accounted for. Thirdly, monies have been expended other than for purposes for which it was appropriated for approved. Next is revenues collected or money expended in contravention of laws or established policies. And lastly, the rules and procedures have been insufficient to safeguard properties, assets, and stores. Next is secure and effective check on assessment, collection, and proper allocation of revenues and other receipts. And also is ensure that expenditure have been made only as authorized. So that's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Kamil Jalil. So I'm gonna present my part. So about operational audit. So what is operational audit? An operational audit is a comprehensive evaluation of a company's operations, system, and process to assess their efficiency, effectiveness, and overall performance. So operational audits differ from financial audits, which focus solely on financial statements. So, operational audit can help identify areas for improvement to increase productivity, reduce costs, and improve overall performance. Okay, the difference between operational and financial auditing, and there is three types of differences. There is purpose of the audit, distribution of the reports, and inclusion of non-financial areas. So, firstly, for purpose of the audit. So for operational auditing, there is focus on assessing an organization processes to ensure they are efficient, effective, and aligned with goals. So efficiency involves minimizing waste and optimizing resource use. So while effectiveness ensure process meet objective and deliver desired outcomes, audit identify bottlenecks, risks, and opportunity for improvement, fostering continuous enhancement of performance and stockholder value. So, for financial auditing, it verifies the accuracy and compliance of the organization past financial records and statements. So, it ensures transactions are correctly recorded per standard like GAAP or IFRS or MFRS, and provides stakeholder with assurance about the organization's financial integrity. So unlike operational audit, financial auditing focus on past events to confirm the reliability of financial reporting. Next, for operational auditing, the audience for these reports is internal management, departments, heads, or specific process owner who need actionable insight to enhance operations. So financial auditing. For financial auditing, the report are intended for external stakeholders, including investors, government agencies, creditors, and the general public who requires reliable financial data to make informed decisions. So report may be distributed as need depending on the scope of the audit or the specific operational areas being viewed. So they are less rigidly scheduled and often focus on ongoing improvements. Financial audit reports are typically distributed annually as part of the organization year-end financial reporting process. They align with the regulatory deadlines and reporting requirements. The report do not follow standard format. They are tailored to address specific internal issues such as operational bottleneck or compliance gaps, and may include detailed process evaluation, root cause analysis, and recommendation for improvement. So for financial auditing, these reports adhere to a strict and standardized format in line for auditing and regulatory standards. This ensure consistency, comparability, and transparency for stakeholder across organizational. So next is for operational auditing. Report contain detailed and specific recommendation aimed at a process improvement and operational efficiency. This recommendation are practical and actionable, meant to enhance the organization internal operation. So for financial auditing, report focus on a fair presentation of financial statements, highlighting compliance weak accounting standard identifies material misstatement and issuing an audit opinion. For example, unqualified, qualified, or adverse. So, lastly, inclusion of non-financial areas. So, for operational auditing, it evaluates non-financial area like processes, procedures, people, and other organizational practices that may not have any immediate financial impact but affect the organization overall performance, quality, and sustainability. For example, include in operational audit are employee performance, operational efficiency, supply chain management, customer satisfaction, regulatory compliance, beyond financial matters, and organizational organizational culture. So next, for the financial auditing, so non-financial areas are considered only to the extent that they may affect uh, the accuracy of financial reporting or indicate issues with internal controls. For example, of non-financial areas covered are internal control, compliance with regulation, and procedures that directly impact financial results. That's all for my part. I will pass to the next presenter.
Hi and Assalamualaikum. So my name is Muhammad Zahri bin Zafarul and my matrix number is 62213122520. So we continue for the next slide, which is my slide. It is about the effective versus efficiency. So the differentiation between effective and efficiency is the first one is the effectiveness refers to the accomplishment of objectives, while efficiencies is defined as reducing costs without reducing effectiveness. The next one is effectiveness assesses whether internal processes, procedures, and systems are achieving their intended goals and objectives, while efficiency evaluate how well resources are utilized to achieve the desired outcomes. So the example of effective is producing parts without any defects, while example of the efficiency is determine the resources used to achieve those of all objectives, such as whether parts are produced at minimum cost or not. So the next slide is the type of inefficiency. So it divided into three row in the table, which is the first one is type of inefficiency, the second one is the explanation, and the third one is example. So the first types of inefficiency is the inadequate supplier management, which is it requisition of goods and services is too costly. An example is bids for purchases of materials are not required. The next one, the next type is in efficient inventory management, which is the explanation is raw materials are not available when needed. While the example as is an assembly line was shut down for lack of materials. The third one is the overlapping responsibility. It a duplication of effort by employee exists, and the example is production and accounting keep identical records. And the next one, the second last is the process inefficiencies. The work is done that serves no purposes. Well, the example is vendors, invoices, and receiving reports are filled without being used. And the last type of inefficiency is resource misallocation, because there are too many employees. So the example is like office work could be done with one less assistant. So, and the last slide for my part is the relationship between operational auditing and internal controls. So the first one is the efficiencies and effectiveness of operations. Operational auditing deals with efficiency and effectiveness of organization, and operational auditing focuses on identifying areas where improvement can be made, like streamlining processes to reduce delays or redundancies, and ensuring that teams and systems are aligned with the organization goals. The second one is the reliability of financial reporting. It is responsible to ensure financial information is fairly presented and comply with approved accounting standard, while unreliable information will affect the company efficiency, obviously. And the last relationship between operational auditing and internal control is the compliance with applicable laws and regulation. Failure to comply to applicable laws and regulation can result large fine to the company, and ongoing lawsuits will take time and company resources.
Assalamualaikum. My name is Muhammad Akmal Hakim, and today I would like to present regarding my part, which is type of operational audits. So firstly, we have functional audits. So functional audits is focused on specific areas of function within an organization such as finance, marketing, production, or human resource. So the objective of functional audits is to assess how well these functions are operating, whether they are meeting their goals, and how they can improve. For example, a functional audit in marketing might review advertising strategies and campaign effectiveness. So the second one is organizational audits. So organizational audits examine the overall structure and functioning of the organization itself, including the effectiveness of its leadership, communication, and decision-making process. This audit assess whether the organization is structured in a way that supports its goal and its resources are being used effectively across all departments. A key focus is whether there is alignment between the organizational structure and its strategy. And lastly, we have special assignments. So special assignments is focused and specific, often request when there is a need for in-depth review of particular area of or issue. Special assignments could cover topics like investigating a sudden drop in performance, analyzing a new project, or reviewing a department suspected of inefficiency. So this type of audit may only be done once and doesn't follow a routine schedule like functional or organizational audits. So next, we have who perform the operational audits. So firstly is internal auditors. These are employees within the organization who are responsible for evaluating the effectiveness and efficiency of operations. They will assess risk, review process, and help ensure that the organization resources are used effectively and that operations are running according to the established policy and goals. They often provide recommendations for improvements based on their audits. So the second one is government auditor. Government auditor is the auditors working for government agency. Government auditors may conduct operational audits of government, departments or organizations that receive public funding to ensure that the resources are used effectively and compliance with regulations. Their work often focus on accountability and preventing misuse of public funds. They also may audit government agencies or non-profit entities receiving public funds. So lastly, we have CPA firms. So CPA firms is independent firms that employ certified public accountants. So CPA firms may be hired to perform external operational audits. They provide an independent third-party perspective on operations, identifying inefficiencies and areas for improvement. They also typically handle audit for client, either business or organization on a contractual basis. CPA firms may also assist with compliance audit and ensure adherence to industry standards. So that's all from me. Thank you.
Right. Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Hamzah Hakim bin Azwan. So I will tell you about the two important quality of an operational auditor. First is the independence. For independence, operational auditor must be free from bias or influence to remain objective. This to ensure their evaluation of and recommendation are trustworthy and not affected by the conflict of interest. So for that, independent is usually not issue for CPA. That is a certified public accountant auditor because they are not employed by the company they are auditing. So number two is the competence. So for competence, competence is crucial for identifying the roots cause of the operational problem and providing suitable recommendation and for improvement. Alright, so next is the criteria for evaluating efficiency and effectiveness. There are two criteria. There is specific criteria and source criteria.
Alright, for the specific criteria are detailed question or benchmark auditor use to assess whether an organization operation are efficient and effective. These criteria guide the evaluation process by focusing on measurable and relevant aspect of performance. So, there are questions that might be used to evaluate plan layouts. First, were all plan layouts approved by Home Office Engineering at the time of original design? Has Home Office Engineering done a re-evaluation study of plan layout in the past 5 years? Is each piece of equipment operating at least 60% of capacity for the 3 months or more each year? And lastly, as does the plan layout effectively use existing equipment? So these are the example question. So this specific criteria ensure auditor can objectively assess and identifying area for improvement in operation. Alright, for the source of criteria, okay, source of criteria refer to where auditor derive the standard or benchmark used to evaluate operation. This ensure that efficiency and effectiveness are measured objectively and consistently. So there are four sources. That is first, historical performance, benchmarking, engineering standard, and discussion and agreement. So for the historical performance, based on an actual result from prior period, auditor can determine whether the things have become better or worse. So for benchmark, it entities within or outside the client organization may be sufficiently similar to the client organization to use their result as criteria. And for the engineer standard, the auditor can use time and motion study to determine efficient product output rates. And lastly is the discussion and agreement. Alright, this party involved should include management of the entity to be audited, the operational auditor, and the entity or person to whom the finding will be reported.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Suhaila Zulkifli. So I'll be presenting the phases in operational auditing. The first action is planning. Second is evidence accumulation and evaluation. Third is reporting and follow-up. So, what is planning? There are five things that we know. The planning in operational auditing. The first one is scope of engagement, where it defines the areas to be audited, clarify the objective that desire the outcomes. Next is staffing, where it assign qualified team numbers with relevant expertise and to ensure the adequate resources and capabilities are available. Third is the background information, and it is very important to gather the data about the organization, processes, past audits. And then it is also for reviewing the policies, procedures, and industry standards. The fourth is understand the internal control, where we have to evaluate the effectiveness of internal controls in place and identify the potential weaknesses or risks. Last one is decide on appropriate evidence, where we determine the type of evidence that needed and establish the method for collecting and analyzing evidence. So, what do we have to know about the evidence accumulation and evaluation? The first one is documentation, where it is to review the policies, procedures, reports, and records, and verify the existence and accuracy of the key documents. Next step is the client inquiry, by conducting interviews with personnel, understanding processes and perspective from the internal stakeholders. Next is analytical procedure, where we use the data analysis to identify trends, inconsistency, or analyze the benchmark results against industry standard or best practices. Last but not least is the observation, where witnesses operation firsthand to assess the process effectiveness and confirm adherence to established procedures and controls. The next step is the reporting and follow-up. Operational and financial auditing reports, where we can differ in operational audit. The report is usually sent to only management, and tailoring of each report is required in operational audit. For example, is by customizing the reporting, audit specific reports, having follow up, and the differences from financial audits. So these are the example of operational audit findings. The first one is audit janitorial firm saves $160,000. So the observation that we can see here is that many janitorial tasks were incomplete or not performed as required. So the impact of this is the inefficient in the janitorial process led to unnecessary spending, and for the outcome that we can make adjustments to the contract or expectation that can save $160,000. Next example is by using the right tool. uh, for example, only a few trucks were effectively used for delivering and picking up vending machine. So the impact of this is that underutilization of resources that cause inefficiency in operation. So for the recommendation that we can optimize the fleet usage by assigning the right trucks to the task. The last one is that computer programs save manual labor. For example, automated processes replace time-consuming manual tasks. So the impact of this is that can improve productivity and reduce labor costs. Outcome from this is that the implementation of the appropriate computer programs streamline the operations. So that's all from me. Thank you.
So that's all from us. Thank you.